Yeah. Good morning, everybody. Happy Tuesday. Welcome back to the morning show here on Stock Market TV. Spencer, Steve, JC, Alfonso with you on this pretty chilly, albeit green, mostly green Tuesday morning. We'll talk about that. We'll talk about sector rotation. I want to ask Steve about his Solana or not, lack thereof, because he sold it all. And then we'll see what's on. We'll see what comes up. How about that? We got Jay Woods on the show today. Always great to talk to Jay. He hasn't been on for like 8 months, so it's been too long. He's like the nicest guy on Wall Street. So we'll talk to Jay Woods at a little after 9. We'll have Kenny Glick, and that would be the plan. What up, chat? How we doing? Off to a good start today? I think so. Yep. We got Dawson. We got Double T, Ravi, Brian, Ovo Bone. What's up, Ovo Bone? Peter, Joe. Here we go. Do we have Steve? Do we have JC? Yes and yes. Okay. Let's boogie.
Oh, we out here, y'all. We out here.
Howdy.
Let me just tell you something. I've had a nice 12 to 20 hours, you know.
What's so good about the last 12 hours?
You know, struggling a little in the afternoon yesterday. I was a little tired. Kids getting over being sick. I'm still getting over being sick. And then just things turned for the better. And I got to tell you, and listen, and this might be bad advice, but this is what I did. I went to the bar. I went to the bar with my family, and it's right next to my daughter's dance class. And there's a bar next door, and we all went as a family waiting for my daughter to get with dance. Had a couple of whiskeys, came back, had just good news after good news after good news in my email inbox, just like check. Went to sleep great, and I don't know, feeling good, just feeling good, feeling grateful this morning, feeling grateful. I think that's the key thing. So not advice, go to the bar and go boozing. That's not great advice.
Monday night at the bar. That's aggressive.
That's what I did, though. Two whiskeys. That's not bad, right? How do you feel about that, Strazza? Am I giving the kids terrible advice here?
I'm trying to figure out what you're trying to tell us.
What I'm trying to tell you?
Yeah.
I think it was just, the kids were cranky. They're a little sick, and then things just started piling on. Just things were getting better, ups and downs in life, Strazza. Ups and downs in life. We are hitting new highs in life, and so we want to be incredibly grateful. And I'm grateful for you, Steve. I'm grateful for you, Spencer, and Kenny, and Jay Woods coming in the house.
What's this bar? You should go there more and compound this good news over whiskey.
You went.
That lovely little Scottish joint.
It's like a Scottish joint. It's not something
nice.
Special. It's fine. It's fine. It's just next door to the dance class.
It's the right place to drink some whiskey.
Yeah, a little Irish whiskey. No big deal. Anyway, that's what I got. Jay Woods apparently disagrees with how I feel about the market. I'm not sure what exactly he's going to disagree with, but he says we're going to debate today. And that's what makes this the best morning show in finance is we are open for debate. And lately, Steve and I have not been debating much, and I don't like it. We're agreeing way too much these days. But apparently, Mr. Jay Woods, floor governor of the New York Stock Exchange, has some things that he feels he needs to say to me. How do you feel about that?
Excited to see Jay Woods. It has been a while since we spoke to Jay. Will we see Jay in New York City?
We will see Jay in New York City. Yeah. Are we going to see him in New York City, or am I going to see him in New York City? Are you coming?
I don't know. We'll see.
I think Strazza's changing his mind. So guys, we got a little get together in a couple of weeks. And, Louis flying in from New Zealand, and the Fonz coming in from Venezuela, and Sean and the whole crew coming into New York City. And Strazza, Strazza's been busy with his road tripping and, construction he's got going on now. And, of course, how convenient that he'd rather stay in Key West in the middle of January instead of coming to New York City. Like, all of these things. And now, see, he's starting to get a little FOMO,
We'll see. We'll see.
I told him, I'm
there's
like,
still
listen,
time.
don't come for me. Do it for yourself, right? You're the only one losing here, Strazza.
I know how you feel.
Yeah, I mean, like
I'm a boy. You're my boy, Strazza. I'm always going to give you good advice, whether you want to hear it or not, as you've learned over the years. I'm gonna give it to you
Steve,
straight.
I would ask you if you've booked your flight, but I know from experience that it is about a week and a half too early to ask that
Whether he was
question.
coming or not, he
So,
still wouldn't have booked it.
Yeah, if I was 100% coming, that would be a ridiculous question.
I
And if you're
preposterous.
coming, and if you got these, if you are lucky enough to have received the invite and you are coming, boy, do we have some surprises for you and some special treats.
Whether I come or not, it's going to be a good time. Always have a good time when we all get together in the city.
We'll tell you all the stories, Steve. We'll tell you about how much fun we had, and
I'm
it
sure
was
you
great.
will.
Yeah,
You'll send me
don't worry.
pictures. I know it. I know
We'll
it.
take notes and send you all the good stuff.
You don't have
Maybe
to do
pictures and videos. Who knows?
that. Just pictures of pizza.
Pictures of pizza.
Yeah.
Last time we were in New York City together for one of these little shindigs, Steve Strazza brought me a bagel. That was very nice of you.
Mhm.
New
I
York
made
City
sure
known
that.
for their bagels.
Well, I think if it wasn't for me on that trip, then we all would have come and gone to New York and not had New York City bagels, and that would have been a huge mistake. So I made sure.
How are the bagels in Key West? Are they as shitty as the ones in Pennsylvania?
They're not good, but we do have one Jewish deli here. Shout out Goldman's
I was
Deli.
gonna say, you guys got Jews down there, right?
Huh?
Yeah, oh yeah. There's plenty of Jews. So there is there's a nice. They try, and it's solid. It's solid. Yeah, it's okay.
It's all Gentiles by me. Unedible, these bagels.
know it
Oh,
is.
they're terrible. It's an embarrassment to the bagel industry.
I'll bet you have terrible.
How
diet.
come
right.
Jews don't want to come? Like, I live near Bethlehem. Don't the Jews want to come near Bethlehem? Nazareth is right up the road too. No, nothing.
I don't think.
Wrong Bethlehem, I think.
I don't think it's how it works. I don't think
That's
it's
not,
the same
apparently
one.
it's not how it works at all. Gentiles for days. We got Dutch and freaking Portuguese.
Yeah, and you're
we got
a
we got
couple
Dominicans,
thousand years too
Italians.
late on that, I think. All right. Should we talk markets?
Do it.
All right.
And
Larry
Colin's
Thompson in the
right.
house.
There are plenty of great bagels in Miami, right, JC? Like, there's some good bagels in Miami. No, stop it. You're such a Miami hater.
I'm
Good
not a Miami
pizza.
hater.
There's plenty of good
There's
food.
way better. There's better pizza than bagels in Miami. I'll tell you that. And no, I don't have Amish by me either. Like, I'm just losing just across the board. I don't have any Amish. The Amish are like hours away. I wish they were closer. They're lovely folks. I got nothing. No. I got Dutch. I got Dutch and Portuguese. The
Dutch.
Portuguese are good.
Right. Okay.
Portuguese
That's
are good because
nice.
they're into the seafood and whatnot. You know.
Pennsylvania Dutch bagels. I don't think that's a thing, Chris Brown.
No. It's not a thing.
Shouldn't be.
And it shouldn't be a thing. If it is, they should abolish that all outright. Okay, let's go. Let's talk about the market. We got the Dow futures this morning up 170 points to the upside. That's 40 basis points, 42,700 almost, if my eyes are correct here. S&P 500 futures up 0.5%, almost 30 handles. Back above 5,900 for S&Ps. You got the NASDAQ 100 futures leading the way this morning, up almost 2/3%, 130 points to the upside. 21,070 for the NASDAQ 100 futures. 30-year bond futures, positive today. Bond market has absolutely been crashing down to 111, but slightly higher on the day. Crude oil has really had a run, down 0.75%, back to 78.25. You got copper flat this morning. Copper very impressive over the last couple of weeks. 432 for copper, pretty much flat. Gold also flat, 26.75. Silver flat, $30.33. With the VIX back under 19 with yesterday's key reversal or potentially key reversal. Let's see if we get some follow through today. And then finally, of course, over in funny money land, you've got Bitcoin up 2%. 96,400 almost. Ethereum 3,200 up 2.25%. Solana 187 up 2.25%. Binance just under 700 up over 1%. Total crypto market cap, Mr. Spencer Israel 3.26 trillion, with the Bitcoin dominance right in the middle of its range, right around 58.5%. And I will say, on the dollar, we've been talking about it every day. Dollar was up yesterday around this time, completely reversed, lost all of its gains, and is following through slightly to the downside so far this morning. So you can't have a key reversal day without confirmation in the following period. That is today.
I mean,
So
we're
you had
flat.
some
We're flat.
flat on the dollar. Yeah, down a little bit. My point is, if yesterday was a key reversal day in a lot of equities, then you're going to need to see follow through today to the upside. If it was a key reversal day in the dollar, you're going to need to see follow through to the downside today. Again, what do we do in the morning show? We observe what's happening in the market. I give you my interpretation of what it means to me. Strazza will give you his. Sometimes we agree, sometimes we do not. I feel like we usually agree because it's just math, right? So how do you feel about my assessment on some of these key reversals?
Big candles yesterday. So you got to start there, right? And, the way it looks coming into today, it looks like you are getting a follow-through day here. So I think that's big. I think it's really big. If you look at some of those charts that I listed out yesterday, those bearish coils that saw a resolution day on Friday, it looked like they were getting downside follow-through yesterday morning. Now it looks like those moves are failing, right, and being repaired.
And we exactly what you said. You said if the dollar reverses, then those sell-offs and potential failed breakouts turn into false starts, and now they can get going with the dollar falling if the dollar were to fall. And
so
one day,
but
it's playing out like you said, right?
And you nailed it, though. The concept of follow-through, always important, but on a day like today, with chart patterns like this everywhere, it's absolutely critical, right? You get some follow-through on this move higher, you're going to undo a lot of damage over the past couple of sessions. So I think that would be a major positive for the broader market. Too many failed breakouts out there.
Yeah, I think the big theme is less about failed breakouts and more about range-bound markets. Breakouts and breakdowns tend to fail in those range-bound markets.
They have been.
And they have been. Yeah. Louis talked about it in a meeting last week because we're seeing a lot of that stuff in crypto, but it goes into TradFi assets as well. I was buying industrials yesterday. I don't want to give too many details on the stock itself, but let's just say it's a bellwether of the group. Mr. Israel, if you will, can you throw up that slide 3 showing that long-term chart of industrials? I bought one of the bellwethers yesterday. I really like it a lot. Are you buying this breakout? One down month for industrials. One down month. You had a new all-time high in November. December sold off. Cash, money flowing to cash faster than ever in history. Sentiment amongst individual investors just completely falling off a cliff. I don't know what everybody's so upset about. Like, people are very scared, and that's great because historically in bull markets, when people are very scared, they tend to do irresponsible things like sell their stocks and go to cash and things like that. And we like to take advantage of that bad behavior. And I think industrials are a good way to do that. How do you feel about that?
A lot of these industrials look really good right now.
Yes, they do.
Like I see it. I'll bet you I could guess which one you bought, but I won't do that.
Well, I don't. You saw the alert, I imagine.
Do you just kind of juice that trade and buy the homies instead? Do they move?
Ooh, Mr.
I don't know.
No. Hold on. Let's.
I don't know.
As the kids say, let's double click on that. That's how the kids talk.
Yeah, check it out.
Double click on that. What Strazza is alluding to, by the way, is that are we good? Are we good on audio? Can you guys hear me in the chat? I know Spencer's having some technical difficulties. What about me? Are we good?
I can hear you.
Can I get a yes? Yes. Can I get a thumbs up?
I mean, you and I could just talk.
No, I understand. I just want to make sure that the folks at home, do you understand the words that are coming out of my mouth?
You sound good. Yeah.
I saw Rush Hour yesterday, actually. So I have that in my head. Great movie. Can we talk
the
about
original Rush Hour?
Rush Hour. I watched Rush Hour last night. I saw Molly's Game the other day too. I don't know where I have all this time to watch movies now.
I've heard great things about Molly's Game. Have not seen it yet.
Oh, it's great. You'd really like it. Especially you with your gambling addiction. You would really you would appreciate like it's all about like poker and stuff like that.
No, I know the story. Yeah, I've been told this. I gotta check it out.
I really enjoyed the movie. In fact, this is the second time I see it. That was a great flick. Okay. We're talking about home builders, and what Strazza has been pointing to for a long time, even before I agreed. In fact, the first time he said it, I thought he was a little bit crazy. But he has turned out to be exactly right. And that is that home builders, although they are consumer discretionary stocks, they don't trade like consumer discretionary stocks. They trade like industrials.
Yeah.
Right. And Strazza has a really good reason for why that may be the case. Can you explain to the folks, Steve, why is it that the homies trade like industrials and not like consumer discretionary?
And aren't the past few months just such a good example of this? Look
Yes.
at discretionary stocks. Think of discretionary, how good they've been. Home builders couldn't be doing couldn't be doing more different moving to the downside.
And just like when the homies were leading with industrials and discretionaries were underperforming, same thing.
Right. So wait, what did you want me to say? Why
explain why? Like, you know how you say like, oh, they make things for people versus, right? What do you say?
They build things. They build things. It breaks that rule though. Typically, the way you want to think of an industrial stock is they are more often than not selling their product and service to other businesses. It's mostly B2B. Home builders obviously are selling their homes in many cases to other consumers, but they're still just they're discretionary stock for that reason, but they still move with industrials. The correlation is very strong. We look at Caterpillar and we look at the home builders, and those charts almost always are moving in the same direction, printing similar patterns. So
why don't you throw up slide 2 so you could just see that relationship over the past year and a half or so. You've been spot on. At first when you first said that, I was kind of like, I didn't really I didn't see it as well as you did. But the market has certainly proven that you are 100% right on that assessment. And I like your thought process behind it. Very well done, Strazza. Well done. We can use a guy like you in New York in a couple of weeks, as a matter of fact.
Wow, we're gonna keep hearing this. To answer my own question, I don't know if it's the right move right now because I think the home builders have really separated themselves as almost a pure bond market trade. If interest rates keep going up, you don't want to be in the home builders, right? Some other things might work. Home builders, at least the way it's been, they're not going to be working. Banks are the same way. So when I look at these charts in industrials, these nice looking coils, they look a lot better than what's going on in the home builders right now. So I think it's a little bit cute. My suggestion that I threw out there.
To be buying the homies instead of buying the industrials. But honestly, if my industrials trade works, the homies are probably doing well in that environment, right?
Probably. But interest rates are probably definitely falling then.
Yeah. And the dollar.
Yeah. Sure.
Yeah. All right. How about the next trade? 2 trades yesterday. One industrial. Another one was a materials stock. Materials.
I know it.
Sean also put a trade on that on the option side as well.
Mm-hmm.
I like them both. The common Spencer Israel, if you will, can you put up the metals and mining index fund, of which my material stock is one of the larger components?
Oh wow!
Looks like a big base. Look, honestly, you know what this looks like, Strazza? Looks like the small cap 600 index. It looks like transports, don't it?
It looks like a mess, JC.
That too. Indeed. Now, I'm not buying this. I am buying a stock that is inside of this.
For sure.
So
I like it. Clear. Look, these names, this whole group, very beat up. Very, very beat up. Some of the worst stocks since the election. So I get it. You're betting on continued sector rotation, and you're looking at some of the groups that have more or less sat out over the short term, and you're betting on a bounce. And there's you got a little tactical base here. If you look at something like XME, and you zoom in, you're getting some multi-week highs here coming out of a base, and just getting back to those pivot highs from November. You're looking at 20% of upside from here,
at least. Yep.
So yeah, it's interesting. That's juicy. It's cool. I like it.
JC, out of curiosity, when is the last time you traded an index like this?
An ETF?
Yeah,
all the time. Yeah, especially when. Usually I like to be in with the bellwether. I know Strazza feels this way too. Like if you like a sector ETF, you're better off in the bellwether.
Yeah, usually.
Usually, not always though.
It's a more conservative way to do things.
And sometimes things are just cleaner at the ETF level. Sometimes they're cleaner at the stock level. But I'm not opposed to being in an ETF. I own them.
One of the things I hate in trading and investing is when I get the right theme, wrong vehicle. It's so frustrating, right? So you nail the theme, you pick the wrong vehicle. Oh, it stinks. At least if you're focusing on the industry bellwether, the odds of that happening are far lower, I would say. Look, it happens. You pick Boeing for aerospace and defense a couple years.
Exactly.
It happens.
Or Honeywell for industrials has been a disappointment. So it's not like super clean.
It's not, but I think it's a fair and solid rule of thumb to just go with the big ones.
Listen, it depends on what you're doing. We have a lot of clients that are financial advisors that focus on ETFs because that's their mandate. We have a sector rotation model that we'll be releasing shortly that is all ETFs. So, you know, it's not, it doesn't make one better or worse than the other. They're just different. Different investors are doing different things for different reasons. It's all good.
Sure. Yeah. Sure. Yep.
You know, I have to remind people of this quite often, Strazza included. And I'm like, you know, Strazza, that not everybody is like you. And other people are doing other things for different reasons. And it doesn't make it better or worse. They're just not like you, right? Like I have to, and Strazza's like, yeah, that's true.
I need to be reminded things sometimes. Yeah.
I remind myself for the record, because I'm like, what are these idiots doing going to cash? Well, they might have different objectives than JC.
Cash.
Get the fuck out of here.
I have plenty of cash these days, JC. I'm not kidding. All jokes aside.
Well, you're in good company, because a lot of cash.
You and Kenny both, Steve. You and Kenny both.
Lots of quiche over here. Plenty of ideas. You know, different things we could do with it. But no need to rush, right, Spencer? No need to rush. In this market, what's the hurry? What's the hurry?
I don't know. I mean, we're about to get earnings season, so maybe that's a catalyst for you to spend some money. But
or a lack of
let's talk about it. Can we talk about it? Do we have time before
Kenny or
the banks and the earnings season?
Give it to me.
I didn't like the price action yesterday in the banks with earnings coming out.
Outside day in the regional banks.
What?
You didn't like the outside day in the regional bank index?
No, Friday we had a downside resolution from these bearish coils in the bank indexes. It was really ugly. Yesterday they came in and they repaired it. Right? Sure, big sticks. Can we get follow through?
We're back to Thursday's levels.
If we get follow through on this move and we start moving higher, undo that bear coil.
Regional banks are up 1.5% this morning. They're back to Thursday's levels. Your Friday breakdown is obsolete now.
Dog, you're making my point. Yes, thank you. So I want a shakeout before the breakout. Thank you, Jake.
Oh,
get to it.
Bro.
So we shake Friday, and now they're undoing it, moving higher, and then you have a major catalyst coming up for this group starting on Friday, right? The banks kick off earnings, and this little shake and go action right ahead of a monster catalyst like the earnings reports. I really like the setup here. So if you look
a little shake and bake
into earnings, maybe the banks are a really, really good option here.
Little shake and bake, little scoop and score.
Bond market has to cooperate. The bank trade is all about the bond market these days. So it has not been good, right? As interest rates have been rallying past few months now. If that stops, though, we're talking about dollar having one red candle. If we get some downside follow through, dollars rates start moving lower. Banks could be a really hot trade in Q1.
Dude, for these stocks to work, the dollar doesn't even have to go lower. It just needs to stop going up. Just like stop, like enough.
Okay, tell it.
But interest rates.
Don't listen to me. Nobody listens. Nobody listens to me. Strazza's starting to listen a little.
Interest rates do have to stop going up for banks. 1-to-1. They're trading in lockstep.
Spencer, you would think after all these years,
I'm telling you,
I've done something right, that people maybe would listen to some of my suggestions.
There are
plenty of people out there that with their heads so far up their ass that they don't listen to what JC has to say.
Alfonso, he doesn't believe me. Show him the chart. Banks and rates. This is real, bro.
I believe you. I'm with you, dog.
The whole bond market is a cluster right now.
Chart on.
Speaking of which,
and then we have Kenny backstage, just so you guys know.
There it is. I mean, they look. Which one's which? You don't know.
I don't know. Honestly, I wouldn't be. I mean, if I looked closely, I could probably tell you. My suspicion is this chart is old and doesn't include yesterday's data.
Fine, you're obnoxious. So
I'm good at this. I do this. You know.
So the banks. We talked about this. They traded with the Trump election odds. For a long time, that was the trade. All of 2024. That
I was told it was just 4 guys behind in a room manipulating that market. Was that not true? Was that just?
It's too late. It's too late to try to unpack that now.
Yeah, it's too late.
You got to wait 4 years.
I think it was the people who didn't like what they saw that were hoping it was 4 people behind in a room manipulating the market. But nope, they were just wrong. It was just supply and demand. Good old-fashioned supply and demand.
But we don't have the Trump odds to trade on. We can't go on Polymarket to figure out where the banks are headed next, like we were able to do all of last year. You do have the bond market. The bond market is now the trade for the banks. I think the bond market keeps you on the right side the same way that the Trump odds did last year.
What if the inauguration next week is a massive buying event, right? Kind of like how the election was a buying event. I don't know. I'm just making that up.
Well, market's closed.
I don't think so.
You know what I mean?
The market's closed all the time. Now it's closed because it's Martin Luther King's birthday.
I would love to,
dude. Every year, where you been for the last 30 years? All right, I'm bringing Kenny Glick on.
I would love to see that data, Spencer, but like I would kind of just dismiss that. Like I don't think the market moves on inauguration.
No. Of course it doesn't.
Market moving day.
Of course it doesn't. I was just throwing it out there.
By the way, just to be clear, the rest of the world doesn't give a shit that it's Martin Luther King's birthday. So the rest of the world will be trading. Futures markets will be open.
Yeah.
And you will be able to see the market reaction just because the U.S. closes for Martin Luther King's birthday. The rest of the world doesn't give a shit.
And cryptos always trade. Cryptos don't close for anybody's birthday.
24/7, dog. Don't matter whose birthday it is.
Yeah.
Kenny Glick, bring him on.
Bring him out.
It's been a long time coming. They ain't come for my club, they tug it. Putting up numbers, 99 problems, and I still kept it 100. Hold up. Yeah.
Kenny Glick, what an intro.
1, 2, 3, 4. Are we working today?
We are.
All right.
You're getting good at this whole audio video thing.
You like that, right?
For someone who's been doing this as long as you have, you would think.
I have my own lighting kit. Yes.
This guy. Look at this guy. You look good today. You look good. You look fresh.
Yeah, I'm getting ready. I'm going to Yahoo tomorrow on the floor. So I'm gonna wear a Grateful Dead t-shirt and a jacket. See what they say. Do I have to wear shoes? I forgot, right?
Are you gonna be with the homie Jared Bilkrey?
I am, yeah. They moved the studios back to the floor, I guess. So I'm going.
Listen, not everybody's as fancy as you are going down to the floor of the New York Stock Exchange.
Yeah, you know what? I still have a buddy that works on the floor. He's one of the first seats when you walk in. He wears a bow tie. Guy's been there for 30 years. My boy, Chris Jordan. What's up, Chris? I'll see you in the morning. So yeah, it's fun. It's fun going down there. It's just one big television studio. But if you haven't been down to the floor, if anybody wants to go tour with me, just let me know. I'll bring you up.
To quote my man Josh Brown, they rent it out on weekends for kids' birthday parties.
Yeah,
turn it into a roller skating rink.
Pretty much.
Yeah.
Pretty much. But it's still awesome to go down there. I love it every time.
It is. The New York Stock Exchange is one of the most beautiful buildings I've ever seen in my entire life.
Really is.
I would argue it's the most beautiful building in New York City, although the Yacht Club is pretty sweet also. There's a few really nice buildings in New York that have been around forever. The New York Stock Exchange is a sight to see, not to mention that it is, in my opinion, the most important building on earth because of the capitalism that it represents.
I agree.
That's just me.
Yeah.
Kenny Glick, it's a bull market. People are scared. Scared shitless, as they say. How are you approaching this market? Are we believing this this turnaround day that we had yesterday? Are we going to see follow through today? How are you approaching, or do you not give a shit at all and you're looking stock by stock?
It's a lot there. I am stock by stock, and I'm liquid and loving it again. I even sold my PayPal. I'm getting rid of my Rambus by Friday. I have options that are hopefully they just take the stock away from me. I'm done. But I like being liquid going into earnings. Yeah, we've actually had some earnings reports already. You had Delta Airlines last week. It was pretty good. But what was surprisingly good? WBA. And there was like a little microcosm on how to trade the way we trade. So, when you have a stock like for instance, KBH today, gapping up big, we come in looking for reasons to short. Doesn't mean we're going to short, but usually the short shows up. Here's the KBH trade. It's on
13%.
So, again, you're above yesterday's aftermarket action, which is super bullish, but you're starting to see, a little come in. I'm short already up here, at 73.
Show it. Show what you're seeing.
Oh, okay. You see my charts right here?
I do not. There it is.
Okay. There you go. So, yeah, I short a little bit at 73, and I'm talking like 100 shares just to get a feel. Right now, this last candle in my face is telling me I'm probably wrong, but that little blue line is where the magic happens. So yesterday's aftermarket close is the VWAP. So if you break through there, all I'm looking for is a retrace to 70.5. If you get that, that's the dip. And then, of course, you guys all know about the faux show bro. Quite often in the bull market, that's perpetual and never ends. Those dips are consistently bought. So the dip becomes the dip and rip or the faux show bro. But right now, I'm all about the cues. I'm showing you the rigging of the market. Now, if you don't believe yet, let me show you the blatant rigging of the market. I'm starting to think, Jay, that these are moves predetermined 2 weeks ago. The report that came out at 8:30 was the catalyst for more volatility. But look at this beautiful action. What you're looking at right here is 24 hours of the QQQ, right? So here's aftermarket yesterday. You know, again, we caught the nice short. There was a lot of chop yesterday, but the chop once again resolves itself to the upside. We had to grudgingly cover our shorts and go long. I'm trying to stay short, my man. So this morning when I walked in, the market's gapped up. I don't trust this market right now, so I'm looking for a reason to short. And here I am, you know, as it's rolling over. I only woke up around 7:30. I saw this bounce and that roll. So I'm shorting in this move. But I knew there was something going on at 8:30. But now look at the beautiful rig. They bring it down. They drag it down to where? Yesterday's aftermarket close. Bang. Here's the 8:30 jobs or the 8:30 report. Wham! In one tick. Where are we going? We're testing the exact price from this morning's highs. And that's where the sellers are still residing. And that's where we got short again on this rollover right now. And I'm still short the Qs as we speak, just looking to get paid. And again, this action is phenomenal. If you're worried about this market, the January effect or the Santa Claus didn't show up, this is the action you want. Volatility is great for us. And like you said, every day for us is the same exact day. The names change, but the trade remains the same. So again, if you guys are looking at quantum stocks, you saw some bottoming yesterday. You know, Rigatoni's down at 550. Probably never thought you'd see the stock there at 550. We did. You know, we cashed out of these a long time ago and, you know, had those call spreads on that got us hammered, but we were doing that with the profits. Now that everybody got excited and now they're too excited about being short, we look for them to start covering the rallies. But focus on some of these earnings reports. But look at these QQQ. This is just a beautiful, if you're not seeing the symmetry here, this is artwork. I know you could appreciate it as a chartist. This is gorgeous. And it also tells me exactly what I'm going to be doing today. If we break that red line on the bottom, we're going lower, and that's the prior day VWAP. I expect to see a stock, the Qs, to pull back to that 503 area. We go back above blue. We're going back to those highs at 510.40. We break there, we're going to 512.50. So it's all right there for you. You just got to know how to read the tea leaves, and that's what we do best.
The homie Howard Linson calls it chart art.
It is chart art. It
Chart
really,
art.
and
he hates the word. Howard hates the words technical analysis. He thinks it sounds terrible. He prefers chart art. I don't know that I disagree with Howard.
I dig it. I dig it. Chart art as well. Yeah. And, you know, and there are certain things. Remember those pictures where you would stare at it and sometimes a picture would come jumping out? Never worked for me, considering I've done all this kind of hallucinogenics. That picture never jumped out to me. But when I see a chart, sometimes it makes you feel something. I'm like, I'm loving this chart. So it's like I'm in a good mood. And again, you can tell by my face, earnings season's here, and there's always something to do. So you know, KBH. I'm also looking at AEHR today. You know, another chip stock that just did not partake in the monstrous rally, and now you're seeing it getting punished again. But stocks that are getting punished is where I look to buy. So if you see this stock above 13.15, let alone 13.50, AEHR probably a buy. When you have monster volatility in the aftermarket, quite often the next day you have a pretty resembling chart. So again, you're sitting here flirting with the lows. Hopefully this thing wakes up and gives us some action back up to like 14.25. So AEHR, not that many people know about this one, but we're focusing on that. And then, of course, all the stocks that just got hammered, the Lunars and the Sounds and all the AIs and quantum stocks. Just a lot of destruction out there. I'll be going over that in the room. Too many to talk about right now. But stay focused on the earnings, and here we go. Tomorrow's JP Morgan, and it's going to be a lot of fun.
All right. See you there, Kenny. Hit the bid.com, guys.
Adios. Kenny Glick,
and he's off the trade.
The grandfather of day trading.
The grandfather?
The grandfather of day trading. That's what he's known on the street. Nobody's been day trading longer than Kenny Glick. Do you know why nobody's been trading longer than Kenny Glick? because it
He's
didn't
100.
exist until Kenny Glick started trading, right? It started at the same time in the 90s. So nobody's been doing it longer. The grandfather of day trading. Shout out Kenny Glick.
All right, we got Mr. Jay Woods in the house. Should we
Bring him out.
let's bring him on here.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Woods, how are you, my friend?
What? I'm doing well. How are you?
You know, just doing a little charting, a little trading, you know, a little coffee.
Yeah.
No big deal. No big deal.
Yeah.
I
I got the coffee. I'm ready to go, and I'm excited to talk to you because usually, you know, a lot of people complain, oh, JC, Jay, you guys look at the same thing. You kind of just like pat each other on the back, and you know, you just
Is that what people
reinforce
say?
what the other one thinks.
Do people say that?
I get that a lot. You know, like you know what? We have some friends that think we need to mix it up a little bit and stop being, you know, so chummy with each other and, you know, disagree a little bit more. And I think we're seeing things a little differently now. And I can't wait to get into your head and, you know, see what you're seeing and talk a little, you know, I mean, we can disagree Sea Isle Avalon and go down that road. You know, I'll fight you on that one. But
Sea Isle and Avalon, stop it.
You want to go out with real people and have fun, you go to Sea Isle. You want to
How come all those people in Sea Isle are coming over to the bars in Avalon?
Yeah, well, if you want a fancy, nice meal, then you go there. If you want to be amongst the
fancy
people,
and nice.
Well, no, but there's a place down the road. My daughter, the Black Cactus, I believe is the name of it. My daughter, during her co-op at Drexel University, designed the menu and all the graphics. And you walk into that place, you see signs, you see everything. Shannon Woods, responsible for that. So the Black Cactus.
That's amazing. Yeah, they just finished building it last summer. I walked by it 1,000 times asking when the hell they were going to open.
They
didn't open until the summer was over.
They opened after 4th of July weekend. I went there in August. Yeah, they missed the boat. I think they had something to do with their liquor license. But still, Avalon, it's a great place. It's like arguing about your favorite children. We love them all, but I have a little more fun in Sea Isle. I don't know. It's just my.
I tell my wife that. I was like, why don't we go hang out in Sea Isle today? She's like, for what?
Yeah, but you got to wear
we got to talk to the wife. The wife says no.
Yeah, you got to wear your Bryce Harper jersey or your Jason Kelsey jersey, and then you fit right in. That's how they roll.
All right. Jerseys in the summertime. Okay. Jay Woods, tell me about what it is that I'm seeing in the market that's so wrong.
Well, you know, I mean, I think the grand scheme of things we'll see eye to eye, but the short term, just like your last guest, man, a little worried. And when I see some of these rallies, when I see some of the leadership, and that's where we're going to disagree. We talk rotation, lifeblood of a bull market. You'll never get me to disagree with that comment. But when the rotation is wrong and the rotation is not what we've been seeing, it's changed, we're off our axis a little bit. So we're not spinning nicely upward like we were, and we're stalling. And what I called for, and this is back in December 27th to be exact, I something changed my thesis, and I think we're in the throes of a 10% correction. And then when you think about it, you know, just do the math. It happens about once every 12 months. We get a 10% correction. We haven't had one since October 2023. Then you look at the similarities between now and October 2023. We had a very nice run up. We talk about new highs, new lows. This is something we talked about on Twitter. The new lows aren't that dramatic in the grand scheme of things because we had 400 new highs in the S&P. I don't know what 400 new highs.
It's a bull market.
Yeah, well, it is a bull market. But, you know, for us to get that new low list to really accelerate, then we're in trouble. I mean, we got a long way to go to see these drop, but the new low list is ticking up, and it's at levels where we saw 5% corrections last year. And then if you go back in time, if you go back to that stretch, August 23 to November 23, when we did have a 10% correction and we stalled, it was the same thing. The new low list started to be at the same level it is now and went wider, but it was coming from a direction where the new highs weren't as much. So for us to get that new low to expand, then I'd be really, really concerned. We're seeing some things. And then the stocks that are leading, the sectors that are leading right now, talk about mean reversions. The materials got decimated. We all know that. Watch the material sector, the XLB. Linde, L-I-N, I think it's Linde, it's L-I-N-D-E
Yeah.
is the stock. I don't know how to pronounce it, but I know how it trades. It's the biggest weighting in the material sector. So LIN just had a nice little reversal on an upgrade yesterday. And guess what? As you know, big moves happen under the 200-day moving average. So if we're going to move and mean revert, you may have a great short-term opportunity in material stocks. Eastman Chemical got an upgrade today. That's up 2%. So we're starting to see rotation into the laggards. If you look at the last month, the leaders, energy, energy and healthcare. Oh my God. All right. What stocks do you not want to see lead when you look at cycles? You don't want to see energy.
Staples.
You don't want to see healthcare. Yeah. Oh, Staples. Well, Staples are getting crushed. That's a dollar story more than anything right now.
Healthcare is one of the largest components in the Dow and the S&P 500. Why would we not want one of the largest components as one of the leaders?
Yeah, and why was the Dow up 200 and something points yesterday? Because UNH is the second most important stock now in the world. If you're looking at the Dow, Goldman Sachs being number one.
A smart man, Jay. A smart man over many years. You may have heard of him. Told me not to fight Papa Dow is how I learned it.
Let's talk about Papa Dow. Let's talk about Dow theory, transports and industrials. They made new highs. There's the chart. Wow, man, Spencer, you're on your freaking game in the back there. Look at you. We made new highs in November, a little out over our skis, and we're pulling back. So Dow theory confirmed the bull market is intact, but this bull market is slowing right now. The transports, thank God for the airlines, or they would really be decimated. I mean, United's making new highs. People are going into it. So we're rotating, but we're not taking all the transports up. Uber hasn't really caught that bid back. And welcome to the transport average. About time that stock got in there. But it's just we're stumbling right now. And I think when you look at risk reward, and that's what we do. And then this is the thing that I will never say. We're friends. I'll tell you. Sometimes you get a feel, and I don't like to ever trade on feel. But when I was on the floor for 20 years trading, sometimes you just get that like weird feeling in your gut. And then you look at the charts to say, what am I looking at here? And right now, it's the risk reward skews more to we have a little more to go on the downside. That said, I look at the big names, bring them down, get my shopping list ready. There are some great levels where I want to be grabbing Apple. I want to be grabbing NVIDIA, get back into Tesla. They don't scare me, but they make all the headlines, and people aren't talking about the mean reversions and the healthcare stocks and the importance of UNH, which reports on Thursday, by the way. UNH, right? At the midpoint, it's 200-day moving average, but it's going up to the 200-day moving average. As a trader, I would never position myself going into earnings, but the one sector that I am very, very fascinated by are the financials. I like the setups we've seen. JP Morgan, Goldman Sachs, after the election, they had gaps that they don't have on earnings day. I mean, I know Goldman better than any stock in the world because it's my biggest personal holding. That stock doesn't gap 10% in one day, ever. And what did it do after the election? It did. It's holding that gap. It's kind of filling it, but it's still in a secular uptrend. It's still now flagging, neutralizing at least on a weekly basis. So the time frame is there. And I think the financials are set up to take this market higher. So if anything blows up my correction, we're in a 10% correction thesis. I think the financials could start doing that next week. And I'll be fine and I'll pivot. Okay, we got 5%. It didn't go as far as I thought it would go. But right now, there's something, and it could be the CPI tomorrow because everyone's worried about the Trump tariffs, inflation. So if you want to go fundamentals and mix it with the technicals, the fundamentals are a little. No, I know you don't. I know, but someone in your audience probably cares because you want to fuse them together. Because sadly, we look at charts. The charts to me are what I look at first, and then when I see a gap, I'm like, Oh, yeah. The story behind it was this. It was that obvious, the election, the gap in the financials, things like that. But there are other stories like Lindy yesterday. Oh, it got upgraded. Someone's finally stepping up. And now the minions are coming back because there's an opportunity for a mean reversion in this stock and this sector. But for me, I see now how the market's going to react or overreact to certain things. And, Trump can do that. They can definitely, overreact certain ways. So when there's uncertainty about tariffs and now the Fed is all discombobulated, should we cut? Shouldn't cut? I don't know. I watched the 10-year. The 10 years telling me the story. You want to look back at the last time the 10-year got to 5%. You want to look at a downtrend that was broken severely on a long-term basis. Oh my God. You look at the 10-year. Well, that hasn't really tipped the market negatively just yet, but we just made 52-week highs in the 10-year, broke above 4.706.
The last time the 10-year was at these levels, the stock market went on one of the greatest rippers in U.S. history, which was the fourth quarter of 2023.
Without a doubt. But before it did that, when it ticked at 5%, that was the low of the markets in October of 2023. But as we got to 5%, there was fear, and that is what I'm sensing right now. When the headlines rip, oh my God, we're at 5%. We got there, and guess what?
So let me ask you this. Let me ask you this, Jay. If things are so bad, what are we shorting? What's the sector or the stock to short here?
That's the thing. I mean, you can do near-term shorts. I think this is something that we have to be wary of and have a shopping list. I stay to the sidelines. I don't have to get aggressively short. Sometimes you don't have to trade everything. But right now, I mean,
how do you feel about the fact that so many people agree with you, and we just had the biggest inflows into money market funds in 4 years? By the way, last time that inflows into money market funds were this aggressive was right at the beginning of the greatest 52-week period in the history of the American stock market, and we just did the same thing last week. So, like this going to cash thing, you're in good company. A lot of people agree with you, like so many.
Yeah, but this is what I do.
Look at AAII. Look at individual investors. Just
I know,
scared to death. Your bet if you're going to cash, you are betting along with individual investors and people going into money markets faster than at any point in the last 4 years. Like that is the company you're in. That's not the kind of company I like to keep. I'm buying stocks.
Yeah, well, I have a shopping list ready. I'm not shorting stocks because I think this thesis could blow up and we get back on that bull run right away. But right now, something is telling me, and it's the leadership that we saw. If you look at the rally we had post-election, and everyone knows this, 6 of the 7 mag stocks, NVIDIA was the one that kind of lagged. Well, we're up. Tesla was up 100%. They carried this market up. The financials helped as well. And now we're seeing that pause. I don't think we're seeing a break in the mega cap names. Watch Taiwan Semi, by the way. That's on Thursday. Yeah. That NVIDIA gave us, okay, this line better than anybody. And I attribute to you, from fake move comes fast moves in the other direction.
Oh, that's Brian Shannon. Don't give me credit for that.
All right.
That's Brian Shannon all day. Brian Shannon 101.
All right. Well, I appreciate that.
I give credit where it's due, Jay.
I know, but you do. And Brian is a good friend.
I don't want to take credit for that one. Usually, all the shit that comes out of my mouth, there's stuff that I learned from my friends. Ralph Acampora, Luis Yamada, Jay Woods, Brian Shannon. I mean, I'm just quoting all my friends. It's all good.
Yeah, but you look at let's look at NVIDIA because everyone has to. It's and then whenever you go on any program, that doesn't do deep dives like you and I try to do in our personal lives. Tell me about NVIDIA. Tell me about Tesla. I'm like, oh my God. Like I see these charts in my sleep, but NVIDIA had a fake out, new 52-week high, and then boom, reversal. And then, what's it got to reverse? It's got a little bit to reverse. I still think we're going to hang on there. It's at that 200-day moving average if we touch it. I think the S&P 500 has got a date with the 200-day moving average. That brings us down 8% from our peak. And then we get a little jittery, and that's when you want to buy. That's when everyone's like, oh, no, we broke the 200-day, like it's a line in the sand. No, it's a level of interest, as Brian Shannon always says. And guess what? We'll stay under there for a few days, but the second we break above it, you want to be long, and you want to be longer as it rallies back above it because that's the washout. And I feel like we have a little washout. And then, you put history aside, you look at everyone talks about the Trump, as you say, the Trump. I always love when you do that. We saw what happened his first year, and people don't know. In 2017, his first full year was the most boring bull market we ever had. We didn't have one down month in 2017. We didn't have one day where we corrected 2%. We spent 17 days under 50 days.
If making all that money is boring to you, sign me up for boring any day.
Well, that's what I do in my personal life. Yeah, I had a job where I traded and I got rewarded for that. But my personal portfolio, we buy the big names, we put them away, and then we reevaluate from month to month, because those monthly candles, as you know, are some of the best candles in the world. But
That's right.
But people are trying to compare Trump 1 to Trump 2, but what derailed Trump 1 was tariffs. So there is a fundamentals where you have to be aware of, because tariffs, trade war, that's when the 2017 bull market ended, and it ended at the same time we're seeing it right now. And what are we doing? He's coming in guns a-blazing. So you got to watch the fundamentals, because no one knows what this means for the market. And a lot of people are on the sidelines, like myself. But for me, I'm on the sidelines, God bless, waiting for, a sell-off to happen. And you have a shopping list, so you have your Mag 7 names. You can play mean reversions right now in healthcare, energy. Maybe I short energy on this rally if I'm shorting anything. Energy did not do well under Trump, and there's this misnomer it did. I missed all the quantum stocks. I didn't get caught up in any of that. But to me, I don't want to short. I want to get ready to put money to work. And guess what? I will chase if I'm wrong and we start making new highs, because
let me ask you this.
Bull market.
Let me ask you this, Jay. Like I said, you and so many other people have so much cash, like so much.
Mm-hmm.
So you specifically that have rules, most of these other people are just scared and going to cash. You actually have rules.
Yeah.
So I'm curious to know from you, what is it that you're looking for to start putting cash to work and start going down your shopping list and actually doing some buying like we were doing yesterday?
Yeah, I'm looking for a little more of an accelerated sell-off. I thought we were about to get one yesterday, but for the bulls, they got a nice victory because we opened at the low, we closed high. Let's see how we trade today. It looks like a gap up, and that's even fading right now. 58.64 in the S&P 500 is the key level. That is the gap up post-election. We've only closed under there twice, Friday and yesterday. To me, we got to get back above that, and then I'll get a little more bullish and then to put more money to work, at least in the major index. But to me, no, this is like Christmas, and I think there's going to be an overreaction, and you want to have a shopping list, right? Put in low bids, and then on days where it really feels bad, put in really low ball bids. Some of my best days ever were during COVID and during the financial crisis, when the panic just got overwhelming and you want to throw up. I have cash on the sidelines just in case we get a little overreaction to the downside. And if I miss a little bit of this move over the long term, no big deal. But when you are on the sidelines, when you get slightly bearish like I am, I don't like this. I want to be in the market. I am a long-term bull. But right now, it's just there's too much weight of the evidence, including the charts, especially the charts, that I see toppiness. Look at KB Homes today.
How come the new lows list? The new lows list is not existent, and I'm not talking about the new 52-week lows. I'm talking about the 1 month lows, 3 month lows. How come we can't get an expansion of the new lows? You know why?
Well,
because anytime stocks are close to breaking down and making new lows, they come in and buy them, because sector rotation is the lifeblood of a bull market. Shout out, Ralph Akambora.
But the rotation sucks, and the amount we have to drop to make new lows.
What rotation
is
sucks?
A little more.
The fact that money rotates into any of the stocks and sectors that are about to break down, and they don't let them break down. What part of that rotation
into
sucks?
quantum stocks? Let's look at some of the
add up the market cap of all those quantum stocks. They can all go to zero, and it doesn't matter.
No, it doesn't matter to me either. I hear you, but this is where people are focusing their attention. When you're looking at the market and you're focused on the big picture, to me, this rotation is bearish rotation. This is not what we need.
It's bearish rotation.
Hold on.
So in your opinion,
here. This is funny.
So it's bearish rotation. Every time they come in and buy the stocks that are most vulnerable to break down, they come in and buy them every single time. You're describing that as bearish rotation?
This is, because what happens, what leads in bear cycles? Energy, healthcare, utilities, they'll come back a little bit as well.
Staples, and they're making all-time lows on a relative basis.
Well, Staples is a different story. Staples is a dollar
How
story.
How is it a different story? You asked me, what are the sectors that lead when it's bearish rotation? And the answer is fucking Staples. And they're making all-time lows on a relative basis.
Yeah, but the answer includes healthcare, and includes energy, and includes utilities.
Healthcare is one of the largest components of the Dow and the S&P 500. One of the largest components of both.
Yeah. Oh my God. I just want to come over through the screen and strangle you because I love you so much.
This is, you got to give the people what they want, Jay. This is why they show up. This is why they come for the debates, Jay. This is TV magic.
You want mean reversion, then I buy this dip in the Staples. Yes, there was a nice double top. It peaked in September.
Buy the dip in the Staples. Knock yourself out.
Yeah,
you like buying all-time lows? I don't.
Yeah. And your audience, by the way, let's talk to your audience. Who the hell in your audience wants to trade Staples? They're the most boring stocks in the world. You can't make a quick buck in Staples. You can't do anything. Yeah, like, hey, put General Mills away. Okay,
I don't know. Walmart keeps making new all-time highs every week. Something's going right there. That's one of the largest components. Consumer staple, and is this doing great?
Yeah, I mean, listen. The Staples, okay, they've broken down. I will give you that, but I still look at energy. I still look at healthcare. They've broken down too, but they're rallying, and that's where we're leading. And guess what else is leading? Intel, the stock that was Walgreens Boots Alliance is back. Hey, by the way, that is a hell of a reversal on a breakdown. Natural gas, long-term breakout. There are areas that stocks that I've dipped the toe in the water and gotten my foot bitten off that actually look attractive. Like, would you buy Intel right now? Oh, the chart is telling me, yeah, you want to get in these names. But what we're seeing is last year's leaders, Palantir getting ripped apart, Nextera getting ripped apart. These were your biggest winners. That is a rotation that we're seeing. And that to me is more speculative rotation. It's like, hey, let's take a shot on this. This dog, the Dows of the dog, the dogs of the Dow.
Palantir made new all-time highs 2 weeks ago, and it was the best performing stock in the S&P 500 last year. It's fine.
And it will be back, and this is listen to me. You don't have to yell at me about Palantir.
I'm not yelling. This is just how I talk. It's not a yell. I'm just loud.
And look at the biggest sign, Soma. And then you make me louder, which is worse. And everyone in my office is like, "What the hell are these guys yelling and screaming about?" But
he's got me all riled up this morning.
Listen to me. Is Palantir an official bear market because it's corrected 20% from its high? You look at Nvidia. Nvidia had 320%
Individual stocks don't go into bear markets. Bear markets are a function of the environment.
Thank you. But you get on these shows, well, it's in bear market territory right now. You're telling me Nvidia,
but they don't teach journalists anything about the market when they go to journalism.
Hey, we have some good friends in the journalist side that are really smart people. But
two.
I'll go three. But yes, they're out there, and I like doing deeper dives in the weeds. But get back to the whole thesis. It is that I disagree. I think that new low list is expanding. Larry Thompson, put up your charts, tweet it out to both of us. I know you put something out there yesterday. The new low list is expanding.
I count the new lows list. We are not seeing an expansion in new lows, Jay.
All right. I got it. Todd Sohn reached out to me too, so I'm like, Todd, send me your little new low list. But I disagree. I think we are seeing it expand, but at the same point, listen, it's not going to. We're not going to make, if we make new lows, and that really expands, then we're in trouble. Something has totally fundamentally changed, but we're not going to see it in those mega cap names. They're pausing, they're coming back. Watch, the semiconductors have me a little scared. If you punch up the SMH, that is not the prettiest chart in the world, and that is
can you throw up slide 4?
Mm-hmm.
This is your semiconductors on a relative basis that my grandmother called me about last week and told me was a Head and Shoulders top.
No, it didn't confirm, so it is not a Head and Shoulders top, but I saw that too. What I see is strong consolidation, but it's teetering on that area where it could break down. What would cause it to break down? I don't think we're going to get that till February when NVIDIA numbers comes out.
What would cause it to break down is the prices of the stocks falling, and you cannot have a correction or a bear market without the prices of stocks falling. And we know for a fact that the prices of stocks have not been falling because you can see it. It's just math. So if the prices of stocks actually begin to start to fall, then we can classify the market as a correction. In the meantime, it's just a bull market. Buy the fucking dip, and we are.
Yeah, and the three biggest components of the SMH, NVIDIA, Broadcom, Taiwan Semi. I got to get some water here. God, I'm all disheveled. They're all holding up well. They didn't continue on that uptrend and continue to make new highs, but they're not breaking down.
The sector literally tripled in 18 months. It tripled in value. Give it a rest.
Well, if people have that Janet Jackson, what have you done for me lately mentality, and they just want to
tripled.
See, hey,
Semiconductors, which Strazza argues are like the most important stocks in the world, literally tripled in 18 months. Tripled in value. So it corrected for 6-7 months. Well deserved. If that didn't happen, that would be very unusual.
No, and this is basically going back to my thesis. We are in a resting zone, and 10% corrections aren't out of the abnormal. But when it happens, everyone's going to be freaking out, and that's when we have to get in there and jump in and see opportunity.
I think they're already freaking out. We have the data.
Nah,
the freaks
they
are out.
haven't yet.
The freaks are out.
They haven't yet. No, when they're going to freak out is, they're going to put the Trump stuff with it too, and then, wait for the Fed meeting on the 29th.
What does Trump have anything to do with this?
Nothing, zero. But tariffs could be inflationary, and that goes to the Fed. And then
my grandmother also mentioned when she called me last week about her worries and why she's going to cash. She mentioned the tariffs.
Yeah.
It's all the tariffs. The tariffs. Everybody knows about that. Jay Woods, I just want you to know the chat loves you. They love you.
Okay.
So, we might be debating and whatnot, yelling at each other, even though this is how I talk. The chat absolutely loves you. And I love you too. You're my
I love you, brother. And we have to talk offline about another thing that's going on with your team over at All Star Charts. You guys do great work. Your team is freaking amazing. The content that you create, and I assume if people are watching this, they follow you. They get your newsletters. They follow your calls. You are on top of things, and you're not afraid to change, which is what I think all good technicians have to do. And we do get a bad rap, and I get it. Hey, something has changed, and wait, you were bearish, 2 days ago, last time you were on with JC, and now I'm bullish. And I'm ready to get bullish.
Yeah, because I'm ready to dig in. Actually changed my mind. You tell him just like that. Be like, I was bearish, and then I had a little chat with JC, and then, as it turns out, the crazy Cuban guy made some good points,
We'll see. Watch this KB Holmes today. I'm watching this gap. The top in that one was pretty epic. I think we're getting mean reversion. You may get another 2-3 days of a rally out of this, but watch the 200-day. It's kind of old support becomes resistance. And I think they're going to fade these home builders on any rally right now. I just got that one up on my screen, so it lit up.
Here's the trade, right? Here's the trade. Ready, Jay? You take those those tariffs, you turn it around sideways, and you shove it right up your ass, right? Isn't that what The Rock said?
Yeah.
You turn it around sideways and shove it up. What did The Rock used to say? Your candy ass. Shove it up your candy ass. Yeah, so shove the tariffs up your candy ass, and you buy China. Flip the book, long China. Let's go. Communism over capitalism.
You know what?
Here we go.
And China, everyone's brushing it aside. There's some nice bases in some of these Chinese stocks, and they got a lot to reverse, and that's what I look for. But right now, focusing on U.S. equities and some of these bigger sectors. I think we got a little like to go, but we're getting a nice bump.
The chat wants you on once a week. The chat wants you on more often. Too good. Gotta give the people what they want, Jay.
Listen. I am a very busy person, but anytime I can join you.
I was gonna say, Jay's a busy man.
Spencer Israel, our head of security here. What was the guy from? Go ahead.
What was that?
What
was the guy from that TV show where they yell his name? Steve. Is it Steve?
No, there was a guy, Larry. That was from. Oh my God, senior moment here. But
no, what's the show? What's the show where they would say, "Oh, it's your kid, it's not your kid," and they would
Jerry Springer.
On stage. What?
Jerry Springer.
Oh,
Jerry Springer.
Jerry Springer.
Will's the security
you are
guy,
not the
Steve,
father.
right?
You are not the father. Yeah.
You
Okay.
are the Steve. If this was Jerry Springer, you're the muscle.
Well, I
Wonderful.
was just honored to be your first guest back in the day, and I'm glad you're still going strong. You guys do tremendous work. And then I got to give you this. I'll break some news to you. Starting tomorrow night, I have a second job, which is crazy, but I will be a professor at Fordham University teaching introductory to technical analysis to grad students. So this is something that I've it's my alma mater, and it's something I really have a passion for. I'll be looking for a speaker to come talk to the class, JC, and I'm gonna probably knock on your
whenever
door.
you want, dude. Those are a lucky group of kids. And if you invite me and I speak, that's the first thing I'm gonna say. It's like, listen, you little bastards, pay attention to this guy.
Well, they're all professional grad students, but
well, they're older
yes,
bastards. Whatever. I'll make sure to give it to them straight.
All right, we'll talk offline, but always great to join you guys. Keep up the good work, and let's see. We're already selling off in KB Homes, down $3 from where it opened.
Shout out to the Jesuits. Shout out Jesuits.
Oh man, yeah, I'm a Jesuit snob through and through, high school, college. Yeah, and the good things about they make you well-rounded. Like I have a son that's at St. Joe's University now, and he's livid because he wants to study finance, but he had to do philosophy. He had to do his theology class because they want you to be very good at Jeopardy, and that's something I'm good at. And New York Times crossword puzzle, Sunday puzzle, crushed it again.
Tell them to be careful with the rocks for jocks. I took rocks for jocks in college. It was really hard.
Yeah.
Like, it's not as easy as they say. Well, I
took
rocks. I had to do science. I took rocks for jocks. It was really hard. Really hard. Jay,
hey, listen,
Spencer, make sure Jay comes on more often. This whole once every 6 months stuff is
thanks
bullshit.
a lot, Jay.
Bullshit.
All right.
You got to be on more often,
I'll
Jay.
see everybody. All right. Love you guys. Talk soon.
Adios.
You know what? One of my favorite things about Jay is he does the old Jewish goodbye, where he says goodbye for a half hour. Right?
Is that what it's called? The Jewish goodbye? I'm more of an Irish goodbye kind of guy.
That's what we call it.
What a gentleman and a scholar. What was all that yelling about? You were hard on Jay Woods.
That's my dog. I can be hard on my friends. I'm hard on my friends. I've called you terrible things.
Oh, definitely. But you shouldn't treat other people that way.
You're my boy, so's Jay. What's the difference?
Love to hear that he's teaching at Fordham University and spreading the good word around New York City. I think that's so
Steve Strazza, also a fellow Jesuit.
I was just going to get to that. Big fan of the Jesuits as well. Jesuit background. And also huge advocate of the liberal arts education. I agree.
Why?
I agree with Jay. Because it makes you well-rounded. You know a lot of shit.
Nah, I think it's stupid.
It's frustrating when you have to spend like the first 2 years at your university.
Rocks for jocks.
We had
never helped me out ever in my life.
We had tox for jocks. That was our like jock class. So it was toxicology. It was basically like pharmacy 101.
What? Toxicology?
Tox for jocks. Yep. And women's studies. That was the other big one.
I had to take an economics class. I learned next to nothing.
I studied women, but not so much the class.
I minored in economics, and I would have majored in
throw up the new lows list. I don't know why people keep telling me that new lows are expanding. I have the data. We know that they are not. Like, I don't understand. I don't understand why people are like, "Oh, JC, the new lows." Yeah, there's no new lows, bro.
Yeah,
while you guys were bickering about beach houses, I marked up a chart. Throw up mine. What are you talking about? They're not expanding. So on a 1 month and 3 month basis, let's just facts here, facts only. Okay. On a 1 month and 3 month basis for the S&P 500, new lows just hit their highest reading since 2023. Do we all agree on that?
Sure. So I'm looking at the New York Stock Exchange. First of all, not just the S&P 500. The New York Stock Exchange, in my humble opinion, is a much more well-rounded universe. It includes global equities. It includes small caps. Here you're looking at 500 large cap stocks, which is fine. You're welcome to do that. I'm going to put more weight on the world's most important stock exchange. Shout out Jay Woods, floor governor of said stock exchange. I don't know, whatever happened to our friend Mike Hurley. By the way, get Mike Hurley on the show so we can have this debate, even though he's going to agree with me because facts only. Mike Hurley would say that the first fall day is when we get an expansion in new lows that you have not seen in 18, 24 months. We have not seen that at all. Certainly not in the new 52-week lows list. Certainly not in the 1 or 3 month lows list. You're welcome to cherry pick one index and be like, oh my God, it's the end of the world, which people are doing. I'm not saying you're doing. People do that. I will not. I will look at the New York Stock Exchange. I will look at the lack of expansion and new lows. And I will reiterate why. It's because whenever the stocks in the sectors get down to levels where they could potentially break to new lows, they do not. They buy them because sector rotation is the lifeblood of a bull market, and it's a bull market. So why should anybody be so surprised?
No one's arguing we're not in a bull market.
Madness, JC.
Madness. It's just math, arithmetic.
Stop it. What are you saying here?
Hold on. So here's the other thing, Strazza. And I want the chat to weigh in here. This is really important. All business.
Such bullshit.
All business.
Dude.
Ready?
New lows hit their highest level since 2023 in the vast majority of indexes. And Mike Hurley, if he was on here, he wouldn't be talking about NYSE common stock only because he just uses good old NYSE.
Can we this is all business now. This is all business. We're going to need the chat to weigh in here. I want Steve Strazza. I want Spencer Israel, a man of the people, to weigh in here as well. So on Thursday, I'm going to be on a podcast with our friends Joshua Morgan Brown and one Michael Batnick. It's a podcast called The Compound and Friends. And what I really like about this particular podcast is that these are old friends of mine. So, the ball busting is on another level.
I'm going to send
what charts should I show?
No, I'm going to send Batnick his own chart deck so he's prepared for you. How about that?
He's going to do Oppo research.
Mix things up a little bit.
Strazza's going to give him ammo.
I'll slip him a secret deck. Yeah.
That's fucked up,
like
Strazza. That's fucked up.
No, listen.
Sleep
are you really
with
going
the
to go
enemy?
on there? Hold on. You're not going to go on with our friends and tell them that new lows did not expand. New lows, man, they hit, I don't know, highest reading in a year and a half.
When we're done with this little shindig that we're doing here, I'm going to go and I'm going to count again. And it's not going to take me that long.
Wait.
That's the whole thing, you see?
Let me see. Would you agree with me that if we look at just the S&P 1500, that's a broad measure, right? 1500 stocks. Small,
not as broad as the New York Stock Exchange, but slightly broader, sure.
Did it hit its highest reading of 1 month lows since March of 2023? Did it do that in December?
Dude, I don't know about you, but the stocks that I've been buying this week are fucking ripping, and we're buying China. As soon as I'm done with y'all, I'm gonna go flip the book long China. Let's go communism.
I love you.
I know.
I don't even know what we're arguing about anymore. I feel like we've lost
You're
the
just
plot.
making shit up, Spencer.
I'm trying to defend Jay Woods a little bit here. Came on.
Jay Woods is a grown adult. He can defend himself first.
Last time he'll ever come without his new lows chart.
What floor are you the governor of, Steve? None.
Woo!
You are the governor of no floor. He is the governor of the most important floor.
Speaking of new lows, what do we have here this morning? Been a bit of a bloodbath on the retail front. We talked about this the other day. There's a big retail conference happening. Jeff Mackey was kind enough to preview it for us and give us a few ideas out of it. We had a bunch of headlines on retailers yesterday and more today. This morning, the headline is from Signet. They had some weak holiday sales, so new lows there for SIG down 17%. Yeah, 17% this morning. What else do we have? We talked about KB Homes. That seemed like a pretty obvious fade. I mean, hindsight 2020, right? But
obvious, huh? Oh yeah, investing so easy.
Hindsight 2020.
It's up
but
13%. It's pulling back a little bit. I mean, it looks like so many other charts.
What else do we have here? Those are the only two that are.
I will say though, on the KB Homes, it's setting off the whole space, and you're getting, failure of this little bear coil, which is nice. You could almost go make a list right now of these little bear coils and measure them out which way they're going in, because they started to go in one direction. Now they're correcting it. Sorry. That's what I have to say about the home builders. It's positive price action. Okay.
Can we so I'm long China. Can we do a little thing after this and talk about like buying more Chinese stocks? Fonz, can you run that scan? If you're out there in internet land listening, can you run that for me, please?
We did a special report. We got so ready to write about the China. And then these stocks just started getting hit again. They never got out of correction mode. And as soon as they do, like, we're fully on board, we'll be there. But don't you want to see like these things kind of get up off the ground and come up out of these bases?
I think it's a dollar story, dude. I think that's all it is. I think if the dollar rolls, the industrials and material stocks that we put on, China, they all work. Have you seen JP Morgan? You're going to be bearish this market with the way JP Morgan is trading? Knock yourself out, bro. Knock yourself out. You see this JP Morgan? JP Morgan, kind of an important company, somewhat of a bellwether of the United States. No?
It's a nice
Diamond.
If this thing didn't have earnings coming up here in a couple days, that is a sweet little coil, isn't it?
Yeah, I mean, I'm less interested in trading JP Morgan specifically and more thinking about what the strength in a name like that means for the overall health of the market. Do we have bull markets without financials, Steve?
You know, I like to say you don't really have bull markets without the chips and the homies, right? But I think you could throw the banks in there too. Sure.
Dude, these chips tripled in a year and a half. The fact that they've corrected since then is well deserved. Am I wrong? Like, is anybody going to argue with me there? Tripled.
Chips,
the index.
Chips, homies, and banks. Some of the most pro-cyclical groups you'll come by. Really,
Yeah,
a lot
chips,
of
homies, and banks.
Information there. Yeah. I think
Chips, homies, and banks.
I think industrials digging in here and starting to work. I think that's important. I think that'd be a good development. I saw your relative trend chart.
Throw up the credit spreads. They're in slide 10. What about the fact that we're seeing zero stress in credit? Zero. And if there was real stress on the market, you would see it in credit, obviously, because this is a real market, not these quantum stocks or crypto. That doesn't matter. This is the real market. This is the market that moves things. And if shit is about to hit the fan, you're going to see it in the bond market. You're going to see it in credit. You haven't seen anything. Credit spreads are as tight as they've been this entire bull market.
Mm-hmm. Yep. Positive. Check. That's great.
The weight of the evidence continues to suggest that you buy the fucking dip, right? Isn't it BTFD? I didn't make it up. It's just what it is. Bull markets, you buy the fucking dip. So it's a bull market, and what are we doing? We are buying the fucking dip. Am I like wrong? And people think I'm crazy. Seems like common sense.
I'm with you. If you are looking for a short, though, I think you shut the hell out of this Eli Lilly here. Just goodbye. This thing.
Is that because you have biases that you're just not a fan of what they're doing, or is there?
No, it's because this kind of sentiment I look for, and it doesn't come around very often. And when you get something like this, where everybody's just on one side and nobody disagrees that maybe this drug is bullshit, that there's huge investment opportunities there when people are this off sides. Analysts have chased after this stock all the way up. It's become one of the largest businesses in the world by market cap. They're selling a drug that may have some problems and may not be a wonder drug. That's all the bet you have to make, is that's not a wonder drug, right? It could be a lot of other things, just not a wonder drug. This is a great short. And then look at the Novo, right?
What
Isn't
the
that
hell?
the roadmap? That one already moved. Top, downside follow through. Look at NVO. What's it, 50% drawdown here? Nasty. That's where Lily's going.
Wait, I'm sorry, I'm just seeing this. There was some Eli Lilly guidance this morning.
Yeah. What does the guidance say? As it turns out, it's not a wonder drug.
It turns out
they guided revenue for 2024, $45 billion. That's 3% below the prior guidance that was given at the end of October.
There's nowhere to grow. Once the market has priced that the total addressable market for your drug is the whole world, you can't grow anymore.
So they're saying 24 revenue of 45 billion, 25 revenue of like high 50s, like 58 to 60 billion dollars.
So one hole, I understand. Like you're saying that they gave their earnings projection, it wasn't due to the drug. The drug is the business. That's what the business trades on now, right? There's the earnings results and the revenue results of the company, and then there's the results of the GLP-1 drugs, and that's what the market's moving on. Has that changed, Spencer? It's been the case for years now. They're not the price of this stock isn't moving on its pipeline of other drugs. It's a GLP-1 stock, and that's it.
Can we just
Throw up? Do we have the economist?
Hold on. Can someone just Can someone just explain to me like why people need to take a drug? Why can't they just exercise and eat healthier?
But there's
I mean, some people really do need this drug, right? Most probably, I mean, could do it without it, right? But so there, I mean, this drug started. Remember how this started? It was for people with diabetes, right?
yeah,
That's how this whole thing started, and
it's
then
kinda ridiculous. You're right,
it
Spencer. I
expanded
agree with
beyond
you.
that.
Throw this up because this is super important
Yeah, I mean,
context.
Eli Lilly. I mean, we're now going on almost what this is 11 months now of sideways action. 11 months. It's been not great.
Can you throw up my Economist magazine cover because I don't think we can finish the discussion about these stocks without this cover. So this was the last week of October. They
Yep.
give us some good ones every now and then. The
They
Economist.
do. They do. Thank you. And I understand that most economists are unemployed and broke. There's only a few left. So like if anybody out there starts a GoFundMe account to keep economists employed, I'll help.
Go follow these charts out to October when this magazine cover came out. They literally printed this cover with the top.
Yeah. Is that surprising?
I would look for the relative strength in healthcare today. It's got to be somewhere, right? Because the whole sector is getting dragged down on this headline.
I agree, but not these.
I don't know where it is.
Well, this is the largest component. The relative strength in healthcare is in medical equipment.
You want to know a stock that I'm probably going to buy today?
To answer your question, medical equipment.
I'll give you one that I'm probably buying today. It's on my list right here. It's probably what I'm going to do as soon as we get off the show. GMED. Bang. Look at this breakout. Beautiful.
Look at Intuitive Surgical, ISRG.
Really nice too. I was looking at that.
Oh yeah,
like it.
gosh.
You know why these stocks look so good? You know why these stocks look so good? It's because it's a bull market.
Yeah. Remember the Medtronic? It was one of like the most dominant stocks in the market.
Yeah, but that sucked for a while.
It sucked for a really long time. Could it make a comeback here? I don't know, but there's some sort of base shaping up there. Nice pop today.
That's not a bad looking chart, actually.
That's right, Spencer. That's what I'm saying. Yeah,
that's pretty good.
Yeah.
Look,
I'm big in the Furzer right now. I really like
Furzer. But the Medtronic is an interesting situation. First of all, it doesn't look like Intuitive Surgical or anything like that. Medtronic, the reason or a big reason why Steve Strazza loves it so much is because Steve Strazza has made a lot of money in stocks over the last year that look exactly like Medtronic looks like right now.
Yeah, that's right. You're right. I'm looking at it and I'm like squinting my eyes and I could see where it's going. I've seen that path before, right? A little
deja vu all over again, right?
A little right shoulder-ish here.
Yeah.
Get up, working up the right hand side.
Kardashian bottom going on there.
Yeah, start climbing up the right hand side of that thing.
That's right. That's right. You know, these Kardashian bottoms, very explosive resolutions.
Yep. Big moves.
Yeah, big bases, big bottoms.
Yeah. Love them.
Yeah, me too. Shall we, Spencer? We gotta go. We got Chinese stocks to buy.
Nice relative strength in Bristol Myers today. Bristol Myers, Gilead.
Bristol Myers.
All right, there we go. All right, where's my recess thing? There it is.
All right. My recess is that I'm going to be out over the next couple of days. I've got some business to do, people to see, babies to kiss, hands to shake.
Wow.
And I'll be OOO. That means out of office.
Yep.
Over the next 2 days. So please, guys, try not to get us canceled. I'm going to try to call in to the morning show tomorrow, and then I'll be in New York. For those of you, please email me any charts you want me to show on the podcast with Josh and Michael Batnick. I will, and I'll give you a shout out. I'll be like, this chart came from Horny Monkey 69420, or whatever,
Wow. So you'll be hanging out eating sushi in New York City for the next few days. Did I hear that right?
God, I hope so. I don't actually have sushi plans. And believe it or not, for my tomorrow get together, I was actually asked if I wanted sushi. But since I'm not paying, I said no, because my bill can get a little,
Yeah, no. You can't go with somebody else, right?
If I'm hosting, then we'll go and get sushi. But if it's somebody else's dime, I kind of feel bad ordering all that toro and uni. You know what I mean?
In fact, I don't enjoy eating sushi with anybody but you now. You've like ruined it, you know?
Well, so,
I-
you know,
I
we're
forget
all good.
where-
We're all good at certain things. I'm good at very few things, but eating is one of them.
Well, a lot of people like you go with friends, they just think you're crazy. They're like, that's so over the top. But there's
No,
there's
that
process.
happened to me like a year ago. I went out with some friends,
Yeah.
and I was like pulling like my version of a JC,
Yeah,
and they were
right.
like judging me. They were
Yeah,
like, what
right.
are you
I've been there.
doing?"
I've been there. No, just go with your wife.
I was
you
like,
know,
it's
yeah.
ruined for me now. This is what I do apparently.
No, just do it alone. Just do it alone.
Yeah.
I
All
don't
right.
do many things right, but that one thing I am very good at, very talented.
What do we have today? We got Spaces at 11. The Flow Show is back in action finally, 1 o'clock, and then 4 o'clock, market close. JC is doing a video right here on the channel with a one Jason Purrs talking about oil.
Wow.
Buying oil, buying energy? Question mark, question mark, question mark.
Speaking of oil, sold the double. Bang, boom.
So that'll be the plan for the day. Yeah, again, 11 o'clock Spaces, 1 o'clock Flow Show, 4 o'clock Jason and JC talking energy. Tomorrow we'll be joined by Shane Murphy on this show. That'll be fun.
Really?
We'll be
Oh,
here.
I'm gonna miss Shane. That's a bummer.
You won't miss Shane. And that's the plan. So
Get Patrick on with Shane. That'll be fun.
yes, Patrick told me that his internet connection today is not good, but hopefully it's better. I'll get him on for tomorrow's show.
Because he's literally buried in snow, Patrick. He basically lives in Canada, and where he lives, it's all snow. He's just covered in snow.
Yes, he does.
So
Follow us on all the socials, do all that good stuff, like, subscribe. We love it. We appreciate it. Chat, always great. We love you guys. And go make some money, all right?
Bye.
Adios. YOLO responsibly.
Yeah.
Don't buy all the China at once.
No. Don't. No.
I can't take no loss. I don't even know what it costs.